Hello Canada! It's your favorite British observer of all things North American, back to dissect the latest economic news. January 2025, a new year, but the same old worries about inflation linger like the smell of maple syrup in a pancake house. Economists are predicting little change in the inflation rate for January. That's right, it's a cliffhanger. Will it go up? Will it go down? Frankly, at this point I'm more concerned about whether Justin Trudeau will bring back his pandemic beard. The good news is that Canada seems to be managing its economic balancing act for now. But hold on to your toques, folks, because there are a few factors at play that could tip the scales. One of the biggest factors influencing inflation right now is the temporary GST break implemented in December 2024. Think of it as a little holiday gift from the government to your wallets. Unless you were hoping for universal healthcare, in which case, keep dreaming, Canada! This tax break has helped to lower the overall inflation rate by taking the edge off prices for things like restaurant meals and that extra six-pack of Moosehead you definitely didn't need. However, like all good things, this tax break must eventually come to an end. When it does, in March 2025, we'll get a clearer picture of the underlying inflation trends. Speaking of trends, let's take a peek at December 2024's inflation data, shall we? It's been quite a year, and the numbers tell an interesting story. Overall, Canada's annual inflation rate decreased to 1.8%. This is a significant drop from the highs we saw earlier in the year. Now, before you start doing celebratory poutine eating contests, remember that the GST holiday played a significant role in that decrease. It provided a much-needed relief for many Canadians. Without it, inflation likely would have been closer to 2.2%. So while the numbers look good, they come with a caveat. But hey, let's focus on the positives. Grocery price increases slowed down to 1.9% year over year. This is a welcome change for consumers. Of course, that's still higher than I'd like, but at least it's not the 10% we were seeing earlier in 2024. It's a step in the right direction. Gas prices, on the other hand, continued their upward climb, hitting a whopping 3.5%. This has been a persistent issue throughout the year, and don't even get me started on rent. The rental market has been incredibly tough, with prices soaring in many areas. It's enough to make you want to move into an igloo. At least you wouldn't have to worry about rent hikes there. Section 4. Core inflation peering beneath the surface. This section delves into the intricacies of core inflation, a concept that might seem dry at first glance but holds significant importance in the world of economics. Now let's talk about something economists like to call core inflation. It's a term that often pops up in financial news and reports, but what does it really mean? Don't worry, it's not as boring as it sounds. Well, it is pretty boring, but it's important. Understanding core inflation can actually be quite enlightening. Core inflation measures price changes excluding volatile items like food and energy. By filtering out these unpredictable elements, it provides a clearer picture of underlying inflation trends. Think of it as looking at inflation without the distractions of avocado shortages and OPEC meetings. These factors can cause temporary spikes or drops in prices, which might not reflect the true economic situation. Why do economists care so much about core inflation? It's because this measure helps them to strip away the noise and focus on the more stable components of inflation. Because it gives them a better understanding of the long-term trend of inflation. This long-term view is crucial for making sound economic policies and decisions. It's like trying to judge a hockey game based solely on the penalty minutes. You'd miss out on the overall strategy and skill of the players. You might miss the actual flow and skill of the game. Similarly, focusing only on headline inflation can obscure the true economic trends. Core inflation helps economists see past the short-term noise and make more informed decisions. By understanding core inflation, they can better predict future economic conditions and craft policies that promote stability and growth. Section 5. The Bank of Canada's High-Wire Act, Interest Rates and the Future. And speaking of informed decisions, let's talk about the Bank of Canada, shall we? This institution plays a crucial role in shaping the economic landscape of the country. Those brave souls are tasked with keeping inflation in check, and they've been walking a tightrope lately. Balancing economic growth and inflation is no easy feat. In January 2025, they decided to cut the interest rate to 3%. That's right, a cut. This move was unexpected by many analysts. It seems they're feeling cautiously optimistic about the economy and believe that inflation is finally starting to behave itself. Businesses are hopeful and consumer confidence is on the rise. But don't get too comfortable because there are still storm clouds on the horizon. Economic uncertainties are always lurking around the corner. That potential trade war with the United States, it's a looming threat that could disrupt the delicate balance. Yeah, that could throw a wrench into everything. Tariffs and trade barriers could have far-reaching consequences. If those two economic titans start throwing tariffs around like hockey pucks, it could send shockwaves through the global economy. The ripple effects would be felt far and wide. So what does the future hold for Canada's economy? The path ahead is uncertain, but there are reasons to be hopeful. Will inflation remain under control? This is the million-dollar question that everyone is asking. Will the Bank of Canada continue to cut interest rates? Their future decisions will be closely watched by markets and analysts alike. Will Justin Trudeau ever bring back the beard? Only time will tell. It's a lighter question amidst the heavy economic discussions. Until then, stay informed, stay vigilant, and for the love of all that is holy, keep an eye on those gas prices. They can be a good indicator of broader economic trends.